Hey, good morning. It's Monday. Let's do some dollar pairs, yen pairs, gold and oil, and anything else you want. Let's go. So, good morning, everybody. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Namaste. If you're new to these webinars, please show, the way you pay it back, I guess I should say, is to visit TradersWay.com. They're the sponsor. They bring this to your life. And if this benefits your life in any positive way, please visit TradersWay.com. That's how you pay it back. They want you to succeed, so they are investing into your education today so that one day you will have skills and confidence. And when you're ready to trade real money, you'll choose Traders Way as your prime broker to your new successful Forex trading business. That's a pretty good thing. So I've been trading currencies for over 15 years, so feel free to ask technical and fundamental related questions. I am also now an expert in macroeconomics, according to Harvard University. I barely even looked at this, but this is why I was gone the other day. You want to see it? What? Wayne McDonald. Nice, huh? Nice. Oh. And I made the Dean's List. Woohoo! So anyways, got that done. So now I am an expert in macroeconomics. Got the degree to prove it. And graduated with honors to say it's done and I did a good job. So that's cool. So anyways, apologize for missing, I missed Thursday and Friday, but I got to hang out in a hot tub with Angela Merkel. I'm like, Angie, bring some tequila. Yeah. So anyways, I apologize for being gone Friday. Actually, I spent a lot of time with my children and my mommy and my daddy. So anyway, so thank you very much. Without further ado, let's get on with it. Yeah, I made it. Yeah, it was only, that only took me, and I did learn, this is something new. I did learn this. For my program that I'm in, someone from the school said that of all the applicants, they accepted 1% of the applicants for my program. About year 2, 50% of the people in the program couldn't hack it and quit. And now the program's over because it's too difficult. So anyways, so I did 1 year, I think I did a year and a half at Harvard just doing classes. Then I applied for this program. It was the first of its kind. So I got in, and now I got the first degree, and I get my second degree next year. And they've canceled everything. So it was perfect. They made it for me. Actually, Angie, and Angie as I call her, Angela, made a couple of Trump jokes. One of them got a big laugh. The other one got a standing ovation. You think Harvard's a liberal? Yeah. Anyways, it was funny. She said, some people turn lies into truth and truth into lies. And then she said she grew up in a time when they tore down walls, not build them back up. So anyways. All right. So let's just go. Yeah, actually I do. Roger says, well, do you still think you have an average brain? I honestly do, but I'm a hard worker. That's the only thing that got me through life. So my mom was telling a story, actually, and I hope this is relevant, but the relevance here is hard work. Okay, not some preordained, chosen by God nonsense, right? It's all hard work. And so my mom told a story of when I was 11. I was underage, but I got a job working hockey rinks, but illegally. But that's how it was. So there I was, 11, and I would sell Coca-Cola up and down the steep aisles of the hockey games, and I'd yell, "Coke! Get your ice cold Coke here! $1, get your Coke!" Right? So I'd walk up and down, and I'd collect the dollar, and I'd send the Coke, and I carried a tray of 12. Well, by the end of that first season, I had taken upon myself, because I noticed that the kids doing this, they would get back and they had sold their 12 Cokes and they would quit working. So I became the manager, and as soon as they came in, I collected the money and I gave them more Cokes and I pushed them back out there. And I was taking money from them, so I got a piece of their sales instead of me selling. But I kept them out there and I'd get them to go sell 2 or 3. So all of a sudden the managers are like, this kid has tripled our sales of Coke. So here I was. So the next year, I'm 12 years old now, and I took over my own booth where I was selling coffee, large coffees, medium coffees, okay? And in between periods of hockey play, there's a 20-minute intermission. So twice during the game, thousands of people would come down the stands, crowd around, like shoulder to shoulder, and as fast as I could collect money, they wanted a medium coffee or a large coffee, or 3 mediums and 1 large, or 2 mediums and 3 large, or whatever. And it's just all coming at me, and boom, 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 completely unsupervised. And I'd sell hundreds of coffees in 20 minutes, twice. 12 years old. Pure cash, no cash register, no adult supervision. I'm like, 12? Really, Mom? She's like, you were underage? I'm like, dang. So you had to do like math pretty quickly, but that's not me. But anyways, that's hard work. That's not brains, but that's hard work. So if you can bring hard work to Forex, you're going to be very successful. So anyways, let's just start. Let's go back here. Let's start with Swissy, because this pair is sort of an interesting one, right? Typically, it's a risk-on, risk-off scenario. And right now we can see dollar had been strong for a while, which is not something I like, right? What I like to look for is a weak US dollar, and a weak US dollar points to everything being good. Okay? So when the US dollar is weak, that's a good thing. Another thing is, if the Swiss franc is strong, that's a bad thing. So I look at this, and which one is it, right? I know we're going to have to do further analysis. That's why you cannot close Microsoft Excel, because of the dialog box. Oh, hey, look at that. Thank you. I don't know if you can see that. No, remove the one. Oh, okay. Did you see me start Excel? Did I start Excel? Anyways, thank you, Windows. So anyways, so I look at this, and we need information. That's why I kind of hesitated starting here. But we can analyze it, right? So over the course of time, by the way, I missed you guys. Did you miss me? Feels good being back. I mean, taking 2 days off. When was the last time I took 2 days off? Almost never. So anyways, we can analyze this by, over the period of time, there seems to be some sort of trend. There's the mean, and there's standard deviations above and below. Roger says, so trade wars make things good. We don't know. Okay, that's all I'm saying. We don't know. This isn't enough information. Yeah, is it trade wars that bring down the market, or is it retarded investment decisions based on assumptions, guesses, and hopes? I think it's the latter. Right? The market thought the Fed was going to raise interest rates up and up and up and up and up and up and up. And then they didn't, so then they do something else. And then, oh, we think they're going to do this and that. I think the market has been very foolish for the last few years, actually, making huge assumptions off of nothing. So right now, the market is pricing in 2 rate cuts by the Fed at full employment with no inflation. So anyways, I call this a period of normalization. Okay? So before I move on, let's just say we knew, or we still know, that we are going to lose volatility over the summer. We've talked about it a lot for weeks and weeks and weeks. And at some point, the market just will go away. So we know between now and about June 15th, around that Fed meeting coming up in 2 weeks, trading is just going to stop. So in my humble opinion, the news is hyping everything up. Of course, trade wars are not good and stuff, but look, nothing's actually happened. So, and maybe the fear of the unknown is a big thing because most people can't figure it out. But we're pretty smart people. So I think what's happening is people are balancing their portfolios and adjusting their portfolios before the summer holidays. Okay. Alex says, I've noticed that there is a rate cut call. Do you think it's just bots and all that? This has actually been going on for about 8 weeks, Alex. A rate hike in December. Or, sorry, a rate cut in December. We have talked about it multiple times. I'm like, really? We have pretty decent GDP. We have more people with jobs in the United States now than ever in the history of the United States. We're at not just full employment, we're at maximum employment, right? Practically. I mean, absolutely, totally full employment, right? And we have a little bit of inflation. And the market thinks the Fed's going to cut interest rates. It's not actually by 50 basis points. It's like 62 basis points, which is on their way to like 0.75%. Like, is the Fed going to cut by a half or more? It doesn't seem possible if you're analyzing it. Now, if you're freaking out, who's going to save us if Trump screws up our economy and drives it into the ground? The Fed will save us again. Like, that's what it seems like to me. Okay? So it makes no sense at all, in my humble opinion. But, of course, anything could happen. But whatever. Okay? All right, so let's go back to this. Generally, against the Swiss franc, the dollar has been weak. Okay? Great. Let's see if we can gather more information. No, Ed, why would that happen? A rate cut increases, makes the stock market go up, not down. Oh, I know what you might be thinking. Okay, in periods of, okay, yeah, I guess I see what you're thinking now. We can go back to 2007, let's say. and interest rates were at, what were they, 5.5%. And the Fed cut interest rates, the dollar got strong, and the stock market was down. It seems similar, but it's completely different, I think. I think what you're seeing now is a correction. We've talked about it many times. In fact, I think there will be a very significant stock market crash in a couple of years. We're getting there, but not quite there. Okay. What you're trying to do is overlap really all kinds of things: real estate cycles, business cycles, even political cycles. So we're setting up for a correction, so to speak. What you see now, I think, is literally just jostling for position, getting your portfolios ready as we go into summer, with lots of hype and hyperbole wrapped around it. So Cash says with the increase in tariffs, that's a drag on the economy, and the Fed could cut interest rates to stimulate the economy. So why not cut? Because it doesn't need stimulation, Cash. It's at full employment. It wouldn't do anything. You talk to anyone hiring employees. You cannot even find a qualified employee. So you're at the point where you're hiring idiots, and it's driving you nuts. I saw it actually in Boston. I was at a restaurant, and it took them forever to get the order for us, but the people in front of us. And I kept hearing in the kitchen as people came to pick up the order, he's like, "I'm sorry, I'm just sorry, I'm sorry." He said sorry so many times to someone in front of me, I thought he had screwed up their order. Like, "I'm so sorry, I'm really sorry, I'm sorry." He said it 3-4 times to this group. And I thought what happened, the reason we were waiting so long, I thought that someone had given them the wrong order and they came back with their food and they're like, "This isn't what we ordered," and he had to recook everything. That's what I thought. Then when it gets closer to my time, I go there and I'm waiting again. It's the second time. I'm like, "Dude, where's our food," right? And I can see right into the kitchen, and I realized what it is. The manager of the kitchen had idiots in his kitchen, but he probably couldn't get anybody else because anyone qualified would have a better job. So he's running the kitchen, and the cook, the deep fry person, and the prep person they didn't even really have life skills. I think what happened is they're all parolees straight out of jail. But slow as molasses, no work ethic. They just can't even make French fries, right? And then he apologized to me 3 or 4 times, and I'm like, as an economist, full employment. The only way you can get someone to work, in Massachusetts, you probably only make $25 an hour making French fries. And the only way you can get people to work in that kitchen, parole or whatever, right? I'm like, wow, that's full employment. Okay? So if you stimulate the economy, you're still not going to be able to get a qualified person. By the way, I gave you an example. I call that the lemon law. Remember I said based on used cars? If everyone puts cars for sale, some cars are fantastic cars, some cars are mediocre cars, and some are bad cars, right? With transmission problems and stuff. Well, the lemon is the bad one with a broken transmission. It drives, but the transmission is about to blow, or the head is cracked or something like that. And you won't really know until you buy it. So what happens is, as a buyer, there's an asymmetric information problem where you don't know which one is which. You don't know if it's a peach, right, a lemon, or something in between. So that's a risk you face, and you have to price in the risk. And what happens is you go in, and you're like, and the seller might be selling his peach for 10,000 bucks, but it might be a lemon, you don't know, so you're not going to offer 10, you might offer 5 or maybe 6. So the guys selling the peaches, they never sell their cars, they keep them, because there's no way he's going to sell this beautiful car, he's maintained it and all that kind of stuff. They're not going to sell it for $5,000, so it doesn't go onto the market. And what happens is it comes down to the point where the only cars for sale at the prices buyers are offering because of their risk are the lemons, the bad cars. And in a full employment situation, if you're trying to hire someone, the only person that would accept whatever you're going to offer is an idiot. Because you can get something, they can get jobs almost anywhere, and you're going to have to pay too much, and you're going to get not much back value-wise. Okay? So like stimulating an economy like this isn't going to do a dang thing. Okay? So you may notice in capitalism, there are cycles. What happens is we actually kind of need to cool the economy off, slow things down a bit, fire all the idiots, and maintain a better level. Well, we're trying to, I think right now, kind of maintain this because we could slowly, for the next 3 or 4 years, just coast at this low inflation, low growth, full employment. It's actually Goldilocks. Okay? So instead of raising interest rates, yeah, Trump's renegotiating. Excuse me. Which, by the way, I think is the right thing to do, and I think he's doing a fantastic job of that. Not because I'm a Republican or something, I'm Canadian. But if you study game theory, he knows what he's doing. This is all these moves are what you should be doing. So at some point, let's say probably closer to the election, which I already pointed out, why would you do a deal with China 2 years before the election or a year and a half before the election? You got to wait until the election is red hot, and then you close a big deal. And then what happens? The stock market will rally, and everyone will feel rich because of Trump going into the election, and that's how you become president of the United States for a second time. Which actually sounds pretty smart. But when that happens, then we will get a very red-hot economy, and probably a year after that, we probably face a pretty serious correction. Not because of any individual person, but at that point, we'll be far enough in the maturity of these political cycles, business cycles, real estate cycles, that you can consider it sort of a 13-year super cycle. I don't like saying super cycle because it sparks, conspiracy theories and stuff. But do some analysis, as I have done, and you'll come up with an opinion. All right, let's get off fundies, huh? So anyways, stay calm. I don't know how many times I told you to just do the research yourself. Don't read newspapers. Don't listen to people on TV. They're all selling you something. They're selling you the fear, and fear is sexy. Well, Cash, okay, I'm just giving you my opinion. Take an entire class on game theory and then come back with your opinion. So I've taken one full class on game theory and studied game theory in 2 other classes. I'm not an expert in game theory, but I've done the math. So if I were to make a lot of these moves, that's what I would do. Okay. All right, so let's go into beast. Belly of the beast. Oh, I got to get my little drawing tool. Oh, there's Excel. Where's my drawing tool? Wow, where's my drawing tool? There it is. Should probably put it down here. Yeah, Roger said Trump is freaking smart. I didn't say he was smart. I said he knows what he's doing. And it might be flawed. Let's say it's flawed. We've had plenty of flawed strategies from presidents. But if you're following a strategy in general, whether it's flawed or not, you'll get a predictable outcome. Okay? And that's all I care about. That I can see the strategy, even if it's flawed, you'll have a predicted outcome and you can therefore plan ahead. It's the people that don't know what they're doing that is bothersome, or that do nothing. And so Obama frustrated me a lot when he said things like, do not cross this line, and then Russia crosses the line and nothing happens, or someone like kills your U.S. representative at the embassy. Like when someone like crosses over your walls, walks in and starts killing all the American embassy employees, you should probably respond. And that's, again, my opinion. I'm Canadian. I'm not Republican or Democrat. But if someone killed my foreign workers at an embassy on my soil, I would kick some ass. I would have to. So anyways, so those things when nothing happened in Benghazi frustrated me a lot. Our response to Syria frustrated me a lot. But again, not for political reasons, just for, I don't know, my way of thinking, I suppose. All right. Let's do this. I don't like this setup for gold though, so let's redo this. XAU, yeah. Let's go to a typical setup. All right, so let's just do our job, do our job. Where's the support and resistance? So we got all that done. We had this support. Okay, we had this for a long time, didn't we? Seemed like it was going to do this forever. So it broke to the upside, great. There's nothing else here, but I want to mark this for the future anyways. Okay, so what are some of the things that we know, right? I always ask myself, what is it that we know? Well, we know this is weekly resistance. We know this is price resistance. Okay. Oh, Cash says, irrespective of game theory, a trade war. Yeah, I never said a trade war was good for somebody. You be careful, right? Don't twist it too much, Cash. I didn't say it was good for anybody on the long run. Negotiating is negotiating. Okay? This happens in the boardroom as well as in the Oval Office. Okay? So when you negotiate terms, so like the one thing I always think of this when doing when you're selecting your strategy in game theory, there's all kinds of different things that change the way your open move actually is different depending on the rules of the game. Okay, so when you do game theory stuff, the first thing you have to do is establish the rules of the game. Depending on the rules of the game will change not just your strategy, but your opening move. And sometimes there's simultaneous open moves versus one guy moves and then the next. Sometimes you both move at the same time, and you have to calculate all these things, right? It's just math, right? But here's the way I think of it. Bugsy Siegel, the guy that built Las Vegas, okay, he was a gangster. And it's widely known that when you went in to negotiate with him, you'd sit down at the boardroom table, all right, or whatever, and you sit down, and then he'd take out a handgun and place it in front of him. Pistol sitting right in front of him. He never touched it. He never looked at it. He never pointed at you. He never threatened you. Now, you have to interpret that. It's called signaling. So a signal can change the other player's behavior, and that's the whole point of a signal. So you give your opening move, and that, right? So he moved first, essentially, or he's signaling, right? When you make, so I guess in that case, he's signaling, and you're going to make the opening move. Now, as a game player, it's in your advantage to try to make the other person move in a certain way, even though you haven't done anything and you haven't even told them what you want. Okay? You're only sending a signal. So he would put a handgun in front of him and let you make the opening move. Do you think that would influence the person he was negotiating with? Okay? That's all. So these are important things. Now, what you also should take in account, like his negotiation with North Korea. Remember that? The negotiation, and it all fell apart and they never closed and Trump never even showed up. What was that all about? North Korea? No, that was China. That had nothing to do. And then right when the negotiations with China started to fall apart again, what happened? 2 days later, Trump's in Japan. Right? These are all calculated moves. I don't believe he was really negotiating with North Korea, but I said it around that time. I don't think this has anything to do with North Korea. So anyways, I don't want to keep talking about this because now we're getting into opinions and stuff. All I said is these are calculated moves. I don't want to talk about it anymore unless you study it for, let's say, so I've probably studied game theory for about 22 weeks, reading textbooks, doing math, doing projects. So I'm just saying, from my point of view, from my observations, these are not random events. And if I were in negotiations, by the way, the longer you stretch out the negotiations, the better the outcome for you. Like all of this, it makes total sense. But I don't want to talk about it anymore, especially when it comes down to Trump. Some people just absolutely, like, let's say the mayor of London, they can't even stand being in his presence. Okay? So I'm not saying I like Trump or I love Trump or I would vote for Trump, or I'm not saying anything political at all, but he does know what he's doing. Now, it might even be a flawed strategy, but if I know his game, then I can at least predict the outcome and then change my own behavior, right? But it's the other stuff that I think is harder. So I know he's playing some sort of game with some sort of strategy. I can predict his next moves, which is great. Okay? But let's get back to technicals, okay? It's not a political channel per se, although I love all of this because it's part of macroeconomics. You know, and I took a whole class on international political economy by a rock star professor at Harvard, and it was fantastic. But it all fits into this, but I also wanted to, like, analyze gold. Okay? All right, so anyways, we have market resistance on a weekly basis. We have price resistance, okay? And there seems some sort of confluence. So if you had bought it earlier, what this means is you're getting to a place which is better and better and better for taking profit, and would be a terrible place to buy. Okay? Now, last week, I think we were here during the last webinar, but we talked about front running, and right? And we were wondering if you could front run this a little longer, get into a trade and hold it a little bit longer. It's all sort of mediocre. So, you know, it's up now. What's next? There's that if you believe it's trending. But as long as you're not trending, there's a pretty reasonable move of some sort back down. Okay? Now, maybe it's only here and we get there. Well, this one is probably most likely. I'm going to mark this star. Okay. Possibility star, I think, is probably most likely, and I find it most frustrating. right? But what I can't change that. And the reason it's frustrating is you move from a bottom of a channel to the top of a channel and then drop into the middle of the channel around June 15th, and then what? Nothing happens for 6 weeks. Right? Yes, Cash, you're right. I don't know if he's going to be successful or not. Okay. Remember when I did go through and I showed you game theory, this must have been a couple of weeks ago, I said the only way to avoid, a tit-for-tat strategy always leads lose-lose. And I think that's the point a lot of people are making here. It always leads to lose-lose. But I already pointed all that out and I showed you the game theory, a basic version of it. But I showed you, and the only way to go from a lose-lose to a win-win is collusion. But that's what negotiation is. It's not a pure game. Okay? They will collude. Right? So once they get to the point where they both, let's say, have enough pain or enough desire, then they will collude. Okay? And I said probably a month ago, maybe even longer, that Trump's going to drag it out until the election. Okay. So anyways, guys, what I was trying to get to is I think we may, by the middle of June and middle of July, get in a scenario where we move from a bigger range, this range here, squiggly range, okay, to an inner range, and then just really not really do much. Big Perm FX is USD strength for NFP. No, I don't. I mean, the only importance, right? Well, there's lots of importance for NFP, but is there wage growth? Are average hourly earnings and average hours per week, are they changing? All these things sort of matter, but there's so much of a trend, and I don't think you're going to see dollar strength or weakness either way. Okay, so I think everything right now by the market, and maybe foolishly, we don't know, but I think everything in the market right now is going to be interpreted as, will the Fed cut interest rates or not? Now, remember, just 6 months ago, the same market, the same experts were talking about how much and how fast the Fed was going to raise interest rates. Now, our topic of our conversation at that time, do you remember when everyone was worried the Fed was going to jack up these interest rates? I kept saying, no. They've been talking about neutrality. So do you remember this, guys? So I said, well, what is neutral? And we said, well, the same, it's even. So I'm like, well, what's inflation? Oh, well, just a little over 2%. So what's the Fed funds rate? Well, just a little over 2%. Okay, well, now we are at neutral. Do you guys remember all this? Like, the Fed's not going to jack it up to 4%. That's not neutral. And everyone's like, oh, yeah, well, that makes sense. So now we're there, and they stop cutting. Well, of course they stop cutting. What's the big challenge that the market's having intellectually, right? So now that we're here, now they're like, oh, they're going to cut. Well, why would they cut? The trade war. Fed funds rate has nothing to do with the trade war. Okay, so anyways, just saying, right? Now, Hope says summer timing as well. Yeah, so maybe you just logged in, but yeah, I've said that multiple times. This is all because of rebalancing of portfolios with the assumption that in the next even 3 weeks, guys, we're going to lose a significant amount of our volume and volatility. This is just the market preparing for the inevitable, what the market does always. This is human behavior. So again, if you turn off the TV, turn off the radio, turn off the newspaper and the blog, you might find that the market behaves in a fairly predictable way. Okay? Right? So rely on your analysis. This is what I've been trying to teach you for years and years and years. You're the expert, not anybody else. Okay, so WTI. This is a very, 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 very important monthly pivot. Okay? This, and then now let me change colors. This is a very, very, very important weekly pivot. Based on that, if we can get a reversal pattern, the reversal pattern will look like this, let's say, then our first move is here. But that just gets us to this resistance, right? How did oil behave last week? Okay, well, here's last week's sell zone. Here's last week's target. Beautiful. Okay, not perfect, but nearly perfect. Okay, so where we are now? Well, we're, I think we want something like that if you're a bull. Now, what if you're a bear? What if you're a bear? Well, let's give it a click out here. If you're a bear, then you want the opposite, don't you? So you'll probably get what bulls want, and then the bears are going to enter in here. Okay. Okay. Do you remember what the orange line means? Well, that's definitely a level that you want to pay attention to in the future. It's just leaving yourself notes. That's generally what bears are thinking. Right, so there are bears here. Right? This is the bear sell zone 2 weeks ago. This is the bear sell zone last week. This is the bear sell zone this week. So it just looks like it's going to want to come up to do an M3, M1. Okay. But we don't know. So if you're a bull, you're going to have to get a reversal pattern at support first. And then bears, meanwhile, are going to wait. And if they get it up here, they're going to fire for effect. Okay. WTI is a good leading indicator in of itself. If macro is good, okay, macro is good, WTI go up, which is a form of risk on. Okay, now oil, WTI is priced in dollars. So if this is going up very often, USD is going down. Because if US dollar is falling, you're going to need more dollars to buy the same barrel of oil, which means prices have gone up. Okay, is that a bullish trend right now? No, 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 no. No, 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 no. No, 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 no. Okay. Now, I think, was it last week or the week before we were talking about 47 or something? Somebody said something, and I'm like, 47? No, that's crazy. It's 47.50. Okay. Anyways. Yeah, let's look at dollar pairs specifically. Well, Hope says there's only selling now. That's true, but if you're a bull, you still have to set up your bullish trade plans. And you're at the exact right price to expect a reversal pattern. So now you need to observe a reversal pattern and then get your trade on and manage the risk. But did they say, and I said what, 47.50, something like that. Okay, guys, so it's not that it's going up or going down. Your job is always to predict the future. So what it's doing now is irrelevant, right? What do I say? If you can't see it on Thursday, you're not going to trade it on Monday, which means on Thursdays and Fridays, you're already setting up Monday's trade and maybe even Tuesday's trade. You see the difference there? So an amateur walks in like, what's happening now? Well, who cares what's happening now? Right? You're already on to the next thing. So if that WTI is only bearish now, that's totally correct. So you're either setting up the sell above, right? Or looking for a reversal pattern at below, but not just at random prices. It's specific prices. Okay? So if you see it and you're like, I'm a bull, but the market's been down, what's the next level of support? And because it's a downtrend and you're a bull, you need a reversal pattern at that price, not just the price. The price is irrelevant. You need a reversal pattern. And then even then, because you're still trading a reversal pattern, which suggests maybe up now in a downtrend, you're still saying, well, it's still technically a downtrend, so I might cut my lot size in half. I might keep my stop a little smaller and all that kind of stuff. And you'll tiptoe into it and then take the next pullback even after that. So now you've taken 2 trades to get into a full position. And then your level of confidence and aggressiveness increases as it continues to make higher highs and higher lows until you can technically truly be a bull market. But by the time it has actually begun a bull market, you might have 4 or 5 trades in where someone else says, oh, well, now it's bullish, and they start building their position then. But by then, you're probably already preparing to scale up. There might only be 1 or 2 more trades left, and you already got 5, right? And someone else is buying near reversal pivots, and you're shedding your trades. You're selling your trades to this person who's late. You're getting out with profit, and they're just getting in with your leftover used trades. And they pick up 50, and you picked up 300, right? So it's sort of how the market works. And meanwhile, someone's still selling, even though it's making higher highs and higher lows. And you're like, well, that's funny. So it's just, remember, your job is to plan your trades in advance and observe all these things and take the opportunity and manage the risk. I think if people stop with the trader mentality, especially, let's get rich quick and get a yellow Lamborghini mentality, but instead say, you're analyzing the currency markets to look for opportunity, and then you associate the risk with that opportunity. Sometimes the opportunity has more risk than others and sometimes less risk than others. And because of your hardcore awesome analysis, you can manage that risk. Okay? Okay. So first thing I look at here is make sure they're all in the same time frame. So let's go 4 hour. Well, yeah, so this will take a couple clicks in. Oh, look at these dailies. Let me reset the template. It's a 4 hour, back out a little. 4 hour, that's good. And 4 hour. Okay, so we got Kiwi dollar. So I'll move this over. So the congruency here is dollar on the right, in the denominator, dollar in the denominator, dollar in the denominator, dollar in the denominator, dollar in the numerator. So if we have perfect correlation, these three will go on the left will be going in the same direction, and the far one on the right will go in the opposite. So this is why we're trying to get congruency in time frames here first to make sure we're observing the same amount of information. Okay, so generally down, generally down, generally down, generally down. So that's weird. So what can we say here? Dollar's been strong, dollar's been strong, dollar's been strong, dollar's been weak. Therefore, Swiss franc is much stronger. So ideally, you've been short pound Swissy, euro Swissy, and even Kiwi Swissy. Okay, so we know that that's the trend that's in play. What about the potential for a reversal of trend? Well, on a monthly basis, you would expect to see it around this price. On a monthly basis, you'd expect to see it at this price. On a monthly basis, you'd expect to see it on this price. And on a monthly basis, you'd expect to see it at this price. Okay. Now let me mark now with blue where current price is. Here, 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 and here. All right. So this is about where you'd expect to see a reversal. This is where you'd expect to see a reversal, and it kind of looks like we've already potentially maybe are on our way. If it's going to reverse, then it certainly has started. Here, if it's going to reverse, it's certainly started. And this has already blown through it. So Swiss franc is still very, very strong, right? Or another way of saying it is there's a little bit of dollar weakness here. There's more dollar weakness here, and there's even more dollar weakness here. And there's even more dollar weakness here. So a little bit of dollar weakness. Swissy is still the strongest, so you should be buying Swissy. Can you see that? Even though we're analyzing the US dollar, there's a lot to learn here. Okay? Which one is stronger right now, pound or New Zealand dollar? Pound or Kiwi? Which one is stronger, pound or Kiwi? Okay? But I swear there's lots of people that don't do this type of analysis before trading. So what they do, most likely, is every day they trade the same currency pair, or the same 2 or 3 currency pairs. You always trade euro dollar and pound dollar or something. And yet you should be looking at them and saying, well, which is the best trade today? Kiwi is right, so we can do it this way. So, let's do strong versus weak. Okay? Swiss franc is the strongest. NZD, Euro, Great British Pound. So, your job now as a currency trader is combine strong versus weak. So, you should be what? Short pound Swissy. You should be short Euro Swissy. Okay, now what? Is it pound Kiwi? Okay, so you should be short Great British Pound, NZD. right? Is it Euro Kiwi? I think it's Euro Kiwi, right? See what I mean? And what about Kiwi Euro? Well, actually, you know what? Did I say that? You know what? I'm going to get rid of this one. I don't like that. They're too neutral. And we already got these combined. So these are the three you should be trading. You see the reason I got these? They're too close to each other. They're too close to neutral. So you got pound Swissy, Euro Swissy, and then pound Kiwi. Okay. And that's how you do this every day, really. Now, you notice I have on my profiles, I have Swissy yen. Now, what if I open up Swissy yen and Swissy yen is down? Well, I just set you up based on current relative strength. We don't know if it's going to continue. That's up to your analysis. But we looked at like pound Swissy probably is a good trade. Well, what if pound yen is even better trade? So we know right now of what we just analyzed, Swissy is the strongest. Okay? So we analyzed 4-hour charts. Let's go there. And Swissy was the strongest and set us up on 3 good trades. What am I looking for? Okay. It set us up for 3 good trades. And now what? Can we consider yen as well? Well, yen has been stronger than Swiss franc for almost 2 weeks. A good week and a half. So now you might, by the way, this doesn't put you into trades. It tells you what trades you should be analyzing. There's a difference, right? You don't just jump in and trade. You go to those charts and now say, okay, I'm a bull or I'm a bear. Let's say you're a bear. I'm a bear. Am I at resistance? If not, what are the next 2 levels of resistance? On a smaller time frame, do I have a reversal pattern? So on and so forth, right? But at least now you know what to look at. Okay, so now if you believe the last 2 weeks the pound has been stronger and you were short pound Swissy, right? Now you can also be short pound yen. Okay, you were short pound Kiwi, right? And you were short the pound Swissy. You see the congruency here? Which one do you do first? Well, I'd probably do this one first, then I'd do this one second, and then I would do this one third. Why? Because I line them up, strong versus weak. Yen may be, depend on your interpretation, a little bit stronger than Swissy, then Kiwi. Okay? That's how I would do it. Any thoughts or questions? Well, it can be spot. It can be really anything. What changes is usually the time frame, but those are 4-hour charts, so that could set you up for the rest of the week. So they could be swing trades. But all that is relative strength exercises. And that's how I do it. And that's why you have, when you download my chart templates, that's why you have all these scans. That's what I'm doing, relative strength. Now, there's quite a few EAs that people install into their MT4 that tells them, oh, this one's strong here and this one's strong there. But then I ask the trader, well, how's that determined? And they don't know. So I'm like, well, if you don't know, how could you possibly risk your life fortune on it? Right? You don't know, yet you use the tool. Why? Right? Like, so when I analyze, it doesn't take as long as I just did with you guys, right? So make sure they're all in the same time frame, right? Make sure you know that you got the right numerators and denominators, right? Denominator, 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 right? Oh, denominator, numerator, right? And you start looking at their directions. Where have they been going? Well, a couple of days up. This might want to head down. This might want to head up. This might want to head down. And you start analyzing. Do you have congruency? Are they reversing? Are they trending? Are they neutral? Which one is strongest? Which one is weakest? But you're just analyzing the dollar versus everybody. You understand? You're isolating the US dollar versus everybody. And by the way, hey, lots of people subscribed today. Thank you very much. I appreciate that. Be involved. Oh, I forgot. I set it up on Twitter, didn't I? YouTube, lots of people say YouTube has not done a very good job of alerting you. So you subscribe, but then you get notified really late or not at all. But I set up a new system. If you go to Twitter, sorry, that sound is because I'm typing. That's because I'm typing. Twitter.com/FXBootcamp. All right, now I have to turn all that off. Okay, fire. Okay. That's funny, huh? All right. So here's to all the subscribers. If you go to twitter.com/FXBootcamp and you follow, I guess you follow. If you follow, what happens is when I start the webinar like I did today, you get notified here. Pa-ching! And you just click on the link and it brings you right into the webinar. So that's another way. What happens is when I start the webinar like I did today, you get notified here. Pa-ching! Pa-ching, pa-chow! For show! So that's another resource that I set up last week, I think it was. So if you want to join the 22,000 subscribers there, that's cool. You'll get updated. It's supposed to update when the video is available. The recording of today's live trading, the webinar. Yeah, so it's telling you that now. Okay, so it tells you when I start, and then it posts the video. The recording of today's video, the recording of today's live webinar has been posted for your review. And you just click there and you're in. So it's a little heads up, zippity-doo-dah, zippity-day, make your life a little bit easier. Okay, just a little thing, just so you know. And okay, yeah, so lots of people want to do peso. Let's talk about peso. Make sure you watch the video on YouTube about how to trade the Mexican peso and why it works. I'll post it on the end screen as well. I posted this orange line to say this is where I would expect the market to reverse. You guys remember that? I did that like Tuesday of last week. Somebody wanted to short, and I said, no, it's too early. But if you wait for it to come up here, that's where you should look for a reversal pattern. It's amazing, right? So now we're here, and you want to look for a reversal pattern. Well, what would you consider a reversal pattern? Well, if it did something like this, okay, that might be it. Okay. And why should you even consider it? Well, the basis of this is a flow trade. This is really not a technical trade. It's not even really a fundamental trade. Okay, because fundamentals take in like central bank policy and such. So this is a flow trade. And we know between now and Friday, $2.67 billion will go this way. There's a $2.67 billion short on its way. Maybe starting today. Typically, I like to wait till Wednesday. Typically, even last Friday was a maybe. I mean, you could have done it on Friday here. So be careful. It's not perfect. It's going to be a little late in the game. So I'd say actually, if you were going to make that trade now thinking about it, and I apologize, I've been away from my charts for a couple of days, so a little rusty. But I'd say this is sort of the better trade if you were going to do it. And this is sort of your second chance. And I don't know, thinking about it now, if I'd do it Wednesday. Probably wouldn't. So it comes down to it works today or it probably won't work. Okay. So it either works today or you walk. So it's up to you. Oh, but think of the advice when someone says, I want to do that trade. And I'm like, yeah, I totally understand. Don't do it here. Do it up here. Well, that was pretty good advice. So lucky again, I suppose. So thank you to all the new subscribers. Thank you to those that have been following me for 15 years. Thank you to everybody in between. Please visit tradersway.com and open up an account. You can download MT4, and then you'll notice in the video description below, there's a link to my chart templates. You can download my chart templates for free. Install them on your Traders Way MT4, and my charts will look like your charts will look like my charts, and we'll live in a world of harmony and peace and happiness. If you don't, the entire world will fall apart, collapse into a zombie apocalypse, or even worse, cats will live with dogs. So thank you for being on my team. Thank you for working hard. Thank you for your patience with me. It was a very difficult couple of days. I even missed the swing trading group. Like I said, it was a tough couple of weeks or a couple of days, but got my degree, got that done, so I got to keep going on to the next one. The video to watch how to trade the Mexican peso and why it works is available on YouTube. Subscribe here, as well as twitter.com/FXBootcamp. And I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average.